Hi, everyone. A little deja vu this Monday, don't you think? Kevin, Jeff, more vaccine news, Moderna. I can't say this, didn't have the same impact that last Monday did. S&Ps were up 100 handles. We're still up pretty good. And similar, they're taking the stay-at-home trade-off. I'm actually looking for sales in NASDAQ this week. The NASDAQ, and as far as relative strength, NASDAQ 61.8, S&Ps 78.6, and similar situation in currencies, at least for a while it was. Euro exceeded 61.8, almost got to 78.6, and cable respected the 61.8 from last week's decline from 310. Okay, so that's the main feature. Gold's not down $100, it's down 12. So similar news without the same impact. Would you agree? US dollar yen's not up 100 handles, it's up 38. Right, so those are my impressions from today. Last week, my biggest takeaway was NASDAQ was lower on the week with the S&Ps higher on the week. Okay, that's a takeaway for me. I have a 12-1 off number that's above the market and also is in between the 61.8 and 78.6 in NASDAQ. There's the weekly. I know it's hard to see, but it's this blue candle right here, 12.104. So I'll be looking for that. I Locatelli to attempt shorts. So that means one more high up here to take out 78.6. Maybe that was it at 61.8, and maybe this is it at 78.6. Maybe the S&Ps could make a new high without the NASDAQ for the second time, just like it did last week. Okay, so that's something I have an eye on. Still more bearish cable than euro, and it's being expressed in EG, which has been tough. I'm looking for maybe about 89.30 if we get a little bit more cable strength than euro to buy it down here. And gold, I thought I was going to have a chance to sell it up here at 1920-ish, and it still could happen. Yeah. I'm not sure if it's on the QQQ, but I know I was following Moderna for one reason, since you bring it up. Here it is. Okay, that's what I was looking for. Look at this on the news. Almost at new highs. And this is why I was looking for new highs since we're in the 70s. What do you guys see there? Well, it's almost there. That's your weekly chart. So we're not quite at new highs yet. The high of the move was 95.20, and we've been there. Yeah. So it'd be pretty classic for Moderna to peak the week that it came up with the vaccine. Be pretty classic, kind of. I'm sure there's people. It's 102. Yeah, I see that too. Yeah, it's not showing it on the weekly. So yeah, you're right. 103. And you have confirmed highs on all of that. Okay, so it's not showing it. And so I can't tell what the daily RSI, but you have confirmed highs on the shorter time frame. I'm not saying go ahead and just short it today, but it is into a third drive formation. So we'll see. It's just something that I felt was incomplete here. So sometimes when I see this, I know that there could be one more, especially when the RSI is diverging up around 80. So that's my vaccine analysis for today. And, you know, crude is strong, but, you know, the trades I planned was selling on Saturday, selling cable at 61.8. That's twice in a row it's respected. This was 61.8 here of the bigger picture, and this is 61.8 of the break from last night. And then I'm waiting for the off number in NASDAQ up here above these highs sometime this week, up around 12.1. And perhaps a buy in the yen if we have one of these from here down here around 104-ish. Okay, so those are my ideas coming in, and buying euro pound maybe around 89.30 to 89.20. Those are my ideas from Saturday. I haven't seen anything right now that I would say, that looks like a good shot. And, you know, if you hear yourself say that, it's an impulse trade. You haven't planned it. So I made a promise to myself I was only going to take trades that I planned for in advance. Okay, so that's what I planned, and I'm trading the plan. And so far, the only trade that got off from the plan is cable at this point, which you already had about 50 pips from the 61.8 sell-off. And anyone who knows my style knows I'm a big believer in partial profits, because you never know when you probe if it's going to be a big turn or just, you know, a turn. So you probe it and protect it. It's not a difficult style. And, you know, then you move your stop to BE. I know it's not a market stop, and sometimes you get picked off, but it's better than being all in and all out. You take a piece off, you take all the risk out of the trade. It's not a market stop. But, you know, what you want to do is take as much pressure off of yourself as soon as possible in this business. And Blake, how are you, buddy? How was your weekend?
Good, some good coaching from you this morning, Dale.
Oh, thank you, buddy.
Yeah. You know, the importance of planning your trade and working your plan. You know, making a promise to yourself, and I do that when I'm struggling, and I'm just having a tough time in the markets, which happens to me. It happens to everybody.
Yeah,
That's like one of my rules. Is all right. Hey, unless I was planning on doing this, I'm just not trading. You know what I mean?
yeah,
And and I'll sit here and look at the markets and say, okay, well, I'm gonna buy the euro when it gets here. I'm gonna sell the euro when it gets here. Whatever, that's fine, because I'm planning it. But
right.
trading by the seat of your pants sometimes. You can get yourself into trouble, and and when you consistently do that, it's important to take a step back and realize, hey, I'm going to, just plan my trades and just take those. That's it. Right.
Yeah, it helps me eliminate this thinking, Blake. That looks like a good shot,
Yeah.
right?
No, I
You
agree.
know,
Yeah.
so because I fell prey to it for, I don't know, 40 years. So I
Yeah.
finally promised myself if I don't plan it, I'm not taking it.
Yeah. And that's really, that's smart. And it's very wise words
Yeah,
because
don't wait 40 years to do that, guys. Learn from, learn earlier. Anyway,
well, yes, yeah, and that's why you guys listening in, this is important that you take these lessons, whether it's myself or Steve or Dale or Stelios, that or Paul Franco, if you're listening to him, just take these these nuggets of information that we give you, and it's all from experience. and all the information that we're giving you. So no, we did have some news, this Moderna news, and
Yeah.
I think for a long time we've been saying, now we had Pfizer last week and we had Moderna this week. So this is the news that really could be the buy the rumor, sell the news type of event, right? Everybody's buying equities going into the into finding a vaccine. Then you finally get a vaccine, and then you realize, wow, this economy is going to struggle a little bit more than we originally thought, and people start selling into the strength. So one of the reasons why the S&P had a bigger response last week was because at the same time, the news outlets were announcing Joe Biden would be the winner of the presidential election. So you kind of had a two
A twofer.
two for two. You kind of like two reasons why the market spiked up. But yeah, you can see a pretty limited impact thus far. Now that doesn't mean that the market can't capitalize on these gains, but I'd be kind of careful at this point. You have to be a little careful that you're not getting that the market just doesn't suck you in. One of the things that I'm watching really carefully is in a position I have is the US dollar Mexican peso. You can see it actually not making a lower low. It just took out some stops below these lows, and now we're setting up for a possible reversal. So you gotta watch these types of currencies, because these are the ones that are going to be telling you, look, there's risk appetite. Excuse me. Risk appetite is kind of waning here. And so if we start seeing a really big bounce in the US dollar Mexican peso, yeah, you got to be a little careful with being long risk. And, there are like other pairs like the US dollar Canadians holding up pretty darn well. Even with this great news that we're getting, the dollar Canadians holding up well, and you got crude oil that's up 4% this morning, 4.5%. And so, things like that are standouts that we need to be paying kind of close attention to at the moment. So, we are now there's one other thing I want to talk about really quick is we are heading into the last couple months of the year, and you have to be careful here, because you can really, when trends take hold, they can really take hold November, December, especially the last month, after we get past November, and just start thinking about that, because there's going to be some trends that come in, and whether it's buy risk, or whether it's people are just taking profits, whatever the case may be. What I've seen in December's, and I don't know about you, Dale, if you want to comment here, but I've seen in December's, whatever trends take place, they tend to stick throughout the month. So
yeah, you get thinning trading conditions and kind of exaggerated moves after Thanksgiving. It really thins out,
Yeah, and then it starts to get FOMO, and then everybody's like,
yeah.
"Oh shoot, I need to get on this trend." And yeah, so you got to be a little careful going into the next couple of weeks. So
and then you have cross currents, Blake, with like tax selling and repositioning. It's kind of a, not a real clean technical month.
No, it's really not. So it's just something I was thinking about going into, the last couple months of the year. We have obviously the Thanksgiving holidays in like 2 weeks, and then after that, it really starts to thin out. But here's something that's I know a couple of traders that listen to the daily roundup knew about this, and I'm going to tell you, I'm kind of bummed out. This Friday, my aunt, who's from the Midwest, she's a woman that just hasn't had the opportunities to travel much in her life, and she's in her 70s now. And I told her, hey, let's bring you out to Arizona, and I'm gonna take you to the the Pacific Ocean. You know, time's running short. I want you to go stick your feet in the ocean. You know, she's never been to the Pacific Ocean. So yeah, we had planned for a trip to come out this week, and she was going to stay with my father, and then I was going to take her to California on Friday just for the day, to there and back. And unfortunately, we have to reschedule a trip because of COVID. She's not best candidate for, you know, health wise, should not be traveling really in this current environment. She's probably more susceptible than most people to COVID, and I'm bummed out about it, but it's one of those things that we had to do. So but I wonder how many people's plans are changing. The reason I bring this up, how many people's plans are changing based on, you know, COVID. COVID is real, and you know, the vaccine can't come soon enough, because how much is it going to impact economic activity over the course of the next, you know, several months. And one other thing I want to let you guys know, I had my my in-laws came over. They hung out in front of our house. She's a physician, and she works with some COVID patients. Her son actually just got COVID. He's in ER, is a residency in the ER in Cleveland, Ohio. He just got COVID 2 days ago, and he's having a fairly heightened attack. Yeah, it's not. He's struggling with it, and he's 27. You know, I'm sure he'll be fine. He's 27. He's in his residency ER. He's going to be an ER doctor. Anyway,
so your in-laws didn't even want to come in the house; they stayed outside.
No, we hang out outside. Yeah, with masks on, actually, because I mean,
she's there in the hospital.
She takes it, you know, very seriously. Anyway, she was telling us that by the time the first responders should be the first ones to get vaccines, and after that, she's not going to be a first responder. So, but she does feel, based on some information she got from the CDC, that most people will have vaccines available to them by mid-year next year. And then the thing is, you know, some people are not going to want a vaccine or whatever. You might have to have that in order for you to travel. Like, other countries won't let you. You know, it's just like having a chicken pox vaccination, that type of thing. So it was some really interesting information that I got from her, but I don't want to bore you guys to death. I want to get into the markets, but
with the only difference being that chickenpox vaccination was not rushed out of the door.
You know, Steve, I was just using that as an example. That was it. What did you want to say about chickenpox?
That the vaccine of chickenpox was not rushed out of the door because of an immediate need. So, you know, that's a big difference.
Yeah, I mean, but, you know, the thing is, I guess when you have multiple, you know, companies working on the same thing, and you're going to have different types of vaccines, you know, are some going to be more effective than others, and are some going to have more negative side effects than others? Sure. I bet you if you take Pfizer's, you might grow like a sixth pinky, and then if you take Moderna's, you might grow another penis. And you know that.
Oh wow!
You know,
I'm in.
That reminds me.
I need a new one.
I'm gonna take one of those too.
That reminds me of the Total Recall movie. You remember?
Oh yeah, with the three breasts. I remember.
Yeah, with the woman on Mars with the three breasts. Yes. All
right.
She probably got one of those.
Didn't mean to get you all sidetracked there.
Yeah.
Yeah, right, and Steve, so, chickenpox didn't kill people either.
See what I did this conversation? All of you guys that are listening.
It's your fault.
Oh my God, I can't believe we're having this conversation.
All right, let's do a bias chart here.
Let's get into the markets. I'm going to go ahead and get some of these key points.
The Greeks knew about the three-breasted woman.
Oh my gosh, you guys are all. I should not have done that. So going back to support and resistance here in the euro, obviously we're struggling as we approach 119, and I have to write down that if we get anywhere close to 119, you got to use that as, like, you know, that is resistance. We are range bound, okay, and let's go to support here. We'll be right back down here at 117.30 50, I'm going to write down. And you can see how we're just range bound. Wow, look at the dollar. Mexican peso is really just ripping right now. So this is one of those things where you have to be a little careful with risk appetite when you have this happening, which I might as well just write some of this stuff down. So you guys know that 2003 is really big support. 2080, 28, it's the same numbers as last week. So I'm just going to write them down. 20.03 and then 2084. I think 2084, 2085. We are. I have those false breakdowns. Right through here. 20. I got 2084. It's fine. Okay. Let's go over to the cable. So, I'm not sure why the bottom fell out of it just a little while ago, but it is trading heavy. And I don't think there's been any Brexit news, and Stelios will jump in, I'm sure.
That's why it's falling a little bit. We're running out of days.
Oh, yeah, maybe that's it. Right?
Also, Boris Johnson is supposed to be isolating again because he was in contact with somebody. He's been through it, though.
Yeah. But, how long do those antibodies stay in your body?
I don't know.
Yeah. 132.30 is resistance right here. And that's the 618. Support is going to be down here at 131. And we're range bound. Okay. Let's see here. Aussie. So the Aussie, we're struggling as we're at the 73. We're at the 73 cent level again. And remember last week, we were like, man, if we get back up to 73, it might be a decent short. I mean, here we are, and it's not following through. So I'll write down resistance as 70, because remember we had this horizontal resistance from last week. That's still important. We tried to make a break below this 72.40, so we went as low as 72.20. So those have to be the numbers that we're paying attention to. So, by the way, I have an air compressor in my garage, and yesterday it's an actual air compressor. I can blow up tires to bicycles, cars, all sorts of stuff in my garage, but it's a portable one. And I went to roll the damn thing over, or make an adjustment on it yesterday, and I almost ripped off the side of my finger, which is great because now I'm typing. I'm already a bad typer as it is, but I'm like peck typing now with one finger because I almost ripped off my finger yesterday, which was phenomenal. What's more fun about that is that I had blood all over it looked like a murder scene in my garage, which was was awesome. But yeah, so I'm peck typing this morning. So if you're wondering like, wow, man, Blake is running a little behind here. Yeah, because that's it. That's the reason why. Okay, so Kiwi, 69 cents, still resistance. 68 cents remains support. Notice how we made a lower high, even on the good news. So it's something to be thinking about. All right, so support is 68 cents. It's still very important. I know I referenced this in the week ahead video. And while we're above it, it's still bullish. But we are struggling at the 69 cent level. Okay. Let's see, dollar Canadian. So the dollar Canadian, like I mentioned just a moment ago, it's holding up real well. Remember we had this false breakdown from last week, right?
Yeah. And
I mean, it's still holding up good. We are struggling as we approach 132. You can see this, resistance. I would say it's actually horizontal resistance right here, which is probably pretty important to the market now. And that comes in at 131.80. I think while we're below today, like 131.25, I'm going to write that down. because that looks like the top of this top of the like if it's a flag pattern or a pennant, it's going to be right here. So a break there would allow us to make a move back to 131.80. It's possible, especially with if we get some, buy the rumor, sell the news type of, activity today. Support, let's take a look here. I think it's 130.50, which 130.50 is the 50% retracement. 130.20 is a 618. Based on how it's holding up, I would say 130.50 should offer some pretty decent support today. 30, just typing this out. Again, PEC typing. 130.50. Dollar Mexican peso. Nice hammer developing. I mean, this is a 4-hour chart and we still have 30 minutes left, but just, a little bit of a false breakdown there. Oh no, we already wrote down the dollar max. I'm sorry. Let's continue on. Dollar Swiss. So the dollar Swiss actually looks pretty, and this is, pretty stout here. And I was actually looking at the Euro Swiss. I'm going to show you guys this chart. This is a chart I was paying attention to, and I'm kind of watching closely here. Look at this daily chart of the Euro Swiss. And it's a really nice triangle that's formed. And frankly, we get above like 108.40. That's going to be pretty bullish, and something I'm just kind of paying attention to, which obviously will have a little bit of an impact on the dollar Swiss. Should we get a spike up towards the back up towards 92 cents, 90, and you guys remember this 92 cents is still resistance. It still is. Okay. But we're getting a nice lift here, support being 91 cents. And matter of fact, I think we wrote down support last week as being 91 cents. Did you see what the overnight low was? 90.97. I mean, we literally hit 91 cents and then bounced. So if you guys are paying attention, like for this pair, like I wasn't really focused a whole lot on it, but now I'm kind of focused a little bit on this dollar Swiss. Okay. Dollar yen. Still don't know what to do with the dollar yen. And I think I made that clear in the week ahead video. I just don't know what to do with it. So what we did do is we stopped at the 50% retracement. So 105.60 is still resistance. 104.40 seems to be decent support. And then, oops, 104.40, right? 104.40, not bad. 105.60. We're in a range. Dollar index. Here's the dollar index. That 50% retracement right here is 93.20. Seems like, I mean, remember we had this false breakdown, but look at the horizontal support through here, how important that is. That comes in at 92.50 right there, right? So 92.50, 93.20. Still in a range. US dollar, Norwegian krona. Still paying attention to this, and I haven't traded it. I was gonna buy it. I was gonna buy it on a break above this 914 level, but I still think I'd play it on the long side here. Like I said, I know, like I said last week, I know Citigroup or City Tech is short, so kind of want to play into that. Like if they get squeezed, especially if crude oil comes off, you know, from 42. So this 92 or I'm sorry, 920 level is going to be resistance for now. I know we had it at 914 before, but I'm going to put it at 896 is support here. You can see it right there, right? And then 919. It's range bound. And I'd rather play it on the long side, frankly. Okay. S&P, oops, that's not the chart I wanted. S&P, all right, so we made it because of the news that we had with Moderna. We made it to the 78% retracement. We didn't make it to the previous high, but I'm still going to write down that number. What's going to be very much a bummer for longs is if we close the day back below 3,600 again, because remember 3,600 is the breakout point. So I was thinking we might get up to 3612. If you remember the week ahead video, I was like, oh yeah, we might get up here. We actually surpassed it. Obviously there's news now, but again, it's one of those situations where what if we slump here, you know? Did we just have some Canadian data come out? Yeah, we did.
Yeah, but it was in line. Nothing really.
Nothing exciting.
We had the New York Empire State Manufacturing as well, came in weaker than expected, but it's not really going to move anything.
Okay. All right. Thanks, Delios. All right, we're going to write down 3640 and then 3675 as resistance. 3640. 3675 as resistance. I'm not going to put it on bullish yet. I want to, but I'm not going to. I want to see us close above 3,600. All right, so which we possibly, we can, obviously. 3,600, and then actually, you know what? Forget that. This is going to be 3,580 is support. But just, I think the market's going to want to see it close above 3,600 today. Gold. And now gold got hit following that Moderna news. But as you guys know, really, really critical support comes in. Obviously, 1900 is resistance, is 1838, which is a big 38% retracement. If you guys missed it, it's this right here. 38% retracement. That's going to be really important support. It's 1838. There's buyers ahead of it, obviously. And then 1900 is resistance. We're in a range, but that threatens to go bearish if it decides to break down. Okay, so there's your bias chart. It's probably very similar to the one from Friday. And it's going to be interesting to see how equities respond here. One of the other things I guess I wanted to mention is, again, this vaccine news, whether or not it's good for risk, like if stocks hold up. One thing it's not good for is all the stay-at-home stocks. So if you're wondering why the NASDAQ continues to trade heavy, that's why the NASDAQ continues to trade heavy. Like Amazon, Netflix, those particular stocks are probably
Fangs and MAGA.
I'm sorry?
Fangs and MAGA.
Yeah. MAGA.
Microsoft, Amazon, Google. I forgot what the other A is.
Well, I don't know.
Yeah.
First time I heard that acronym, but I guess the Fangs.
Yeah.
Oh, wait. I've heard MAGA before.
Yeah.
All right.
Oh, yeah.
I got it.
Yeah.
So, guys, Steve.
Apple. It was Apple. Two A's.
I know if you could guarantee that vaccine could give you another wee. Stelios might take it. So
Forex gal liked it. She went, "Ooh, I'll take that."
I'd give it to Steve's wife, I think. I'm kidding.
Oh my gosh, you guys! Oh wow.
Okay, that's sorry, bad joke. Okay.
I think you should keep it, mate, and this way you'll have one.
Oh my goodness.
Yeah. Okay.
So let's change the conversation. So how you guys doing this weekend? Did you guys have a good weekend?
I
Very
feel
well.
shorted now.
We're doing well. We're in lockdown. Kids are having school from home now, from their laptops.
Which is magnificent, especially kindergarten schools having school from laptop. Yeah.
Yeah. Anyway, but all good. All good. The weather is still sunny, so I don't care.
Well, that's good. All right.
Yes.
Well, guys, you know, how do you feel about this? Now, on a serious note, how do you feel about all of this vaccine news? I mean, last week we got buy the rumors, sell the news. Do you think that that's a situation today? How do you guys feel about that? I mean, because, you know, obviously with a vaccine or vaccines coming out, you know, economic activity is going to improve over time, but it's not like anybody's out there running out right now, you know, saying I'm going to go, you know, make travel plans today, because we still have some pretty high numbers of coronavirus cases, and it's probably going to be several months, if not 6 months, before we get some sort of vaccine. So how do you guys feel about today's price action?
Well, I think it's one of the guys I follow on Twitter actually put it really nicely. He said, you can never fully price in a vaccine. It's the same like the trade war. You know, any kind of positive headline, you get more risk on. But it's clear that all these companies have been working for months now, really working hard to try and find the vaccine. So we're getting a few good candidates. It's definitely not a bad thing. I mean, it's obviously good. The question is, how much of that is priced in? What's the market doing now? I think, you know, this is given a boost today, and it's probably gonna. I think markets are probably gonna ride on their coattails for a little bit more. After that, I don't know, but you know, it's very hard to short this market here, and I'm not short. Let's make that clear.
Yeah.
What did your mother-in-law? What did your mother-in-law say about the vaccine? Any guarded thoughts about it, or that is she looking forward to taking it? Any, you know. What did she say, Blake? Your mother-in-law, the physician.
Oh no, she's very much in the camp of I'm going to take a vaccine when it's available.
Okay,
yeah,
all right.
She is as a medical professional. Yeah. Yeah. So, but I didn't really get into details about that. We were just talking more of like, she's got big time, and I know a lot of you guys do COVID fatigue, and one of the reasons why hers in particular, my
she's treating them.
Well, her mother is 100 years old and lives on their property in the backyard, and she's the mother of holistic medicine. So if you
you told me about her.
Nani is she's our Nani. She's turns 100 this year. She's in great shape. She still does. She Zooms every day. You know, she's on conference calls, and you know, she's awesome. She's 100 years old, but she's also obviously very high risk. So she lives on a separate home on their property. In
like a mother-in-law's house, or
but it's pretty far away. Actually, you know, you could actually throw a football, you know, between them. It's a big property.
Nice property.
So, yeah, it is. And she's been she's the mother of holistic medicine. You just go ahead and Google her, and you'll find out who that is. Anyway,
well, she's doing something right.
Yeah, she
be 100 and
uses castor oil and everything. That's the key, just so you guys know. But anyway, she's got big time fatigue, COVID fatigue, but I know the rest of us do too. But she's a doctor. She's so super isolated. She can't see her grandkids because, you know, she can't risk the exposure. And I know we all feel a bit of that, but I think she's like, I'm going to take the vaccine because I need to start living my life again, type of thing. Yeah. So anyway, but that's just to answer your question. Steve,
Thank you,
Stelios,
buddy.
I gotta let you guys take over.
Okay.
I'll just sit here and yammer. So it's all yours, guys. Oh, by the way, I wanted to mention, starting probably in the next week or two, we're going to start doing some tips and tricks with ForexAnalytix. So on the week ahead video, so be looking out for that. That'll be pretty exciting, huh, Steve?
What is going to be exciting? Sorry, mate.
Sorry.
Tips and tricks.
Tips and tricks to use ForexAnalytix.
Oh yeah, absolutely.
It'll be fun. Anyway, all right, guys, I'm gonna pass it over to you. You guys have a great one. I will see you on the daily roundup. For those of you that are ForexAnalytix subscribers, I'll see you in 4 hours.
See you, Blake.
Thank you,
See you
Blake.
guys.
Bye, mate.
Hey, guys.
My friend Costas here writes, in the past, if you told your psychiatrist that you'd have to send an SMS to get out of the house, like we do now in Greece, you would be in medicine in no time. He's absolutely right. You know, if you anyway, this is it sounds a lot like 1984, you know, the book. But anyway, let's see how this goes. Clearly, there seems to be a lot of progress on the vaccine front, which is good news. That's for sure. The question is, you know, Boris Johnson, he's in isolation because he's been in contact with somebody who was positive in COVID. He himself has been through it. So basically, if your own body's antibodies are not strong enough to, when was it? It was like a month ago, to protect you, then what's going to happen? You know, how is this vaccine going to work? I don't know is the answer.
I coincidentally read about a guy that had contracted COVID 4 times. And the fourth time actually it mutated and he died.
Anyway, a lot of question marks, but definitely a
he
good
was
step.
Probably pushing his luck a little bit.
Yeah, I mean, how did you
much.
contract it 4 times? I mean, you have to be careful.
But you anyway. Really have to try. I'm assuming.
Yeah. So the markets are in euphoria again today. We have got some data as well, which was on the positive side, like Japanese GDP better than expected. We're bouncing back from these really horrible numbers, but still, the magnitude of the numbers, it makes predicting quite difficult. So, you know, we were forecasting 4.4% quarter on quarter, came in at 5%. Big difference, but really in terms of actually percentages of the number, it's not massive. But we continue to have some good data. Chinese industrial production was better than expected. You know, it's all looking quite good. The question now, and this is something we were, Boris got COVID in April. Okay, thank you, Jane. So it was a few months. Time flies. The question, though, now is if there seems to be a vaccine or 2 or 3 which are going to be working, what happens? You know, what do people do? You know, it's something that might urge people to say, okay, this is coming. Maybe it's coming in 2-3 months. So let's, you know, stay at home, do the least amount of things we can. We get the vaccine, then we're out. So, you know, maybe we see a little bit of a...
yeah, but we've discussed that before, Celio. It's not going to be 2 to 3 months.
It's not, yeah. Anyway,
I mean, even if there is 2 to 3 months for a vaccine to actually come out and get approved and everything, until you get the millions and millions and millions of doses required to actually, you know, and the procedures to actually vaccinate like the vast majority of the population, you know, that's a process that no matter how much you push forward with it, it's going to take months.
Yep.
Many months.
I agree. Anyway, let's see how things go. As we said before, equities are still very buoyant, and they don't.
It's going to be the gift that keeps on giving. Like the trade war, you first start a trade war, which is obviously negative, you know, for economic activity, and then you know, you start circulating rumors about how this is going to be resolved and how you're making steps forward, and every time the markets cheer about it, and at the end they've priced in more that removing the trade war out of the equation is a positive in comparison to never have had one to begin with. Yeah. And why is that? Simply because this is an extremely bullish market driven purely by liquidity, and none of the negative news actually matter. I mean, let's assume that negative news did matter. I mean, how do we unprice the damage done by COVID? I mean, the markets are higher than they used to be. We've been through, in essence, a depression, and the markets instead of being lower, which they did go lower for like a fraction of a, of the time that anybody would assume under a recession or whatever, they're now higher than they were. So, I mean, we are accumulating debt. Economy is still bad. People are still unemployed, and the market rallies to new all-time highs just because at some point the problem that was never there is going to get resolved. It makes no sense. And the reason it makes no sense is because we're not here due to the vaccine or to the disease or whatever. We're purely here due to liquidity.
Yep. And liquidity is going to continue. That's for sure.
Yeah, of course. Of course. And to be honest, if there was one event that has like a very, very high chance of being buy the rumor, sell the news, probably that's going to be the vaccine. Because once we get a vaccine, the market is going to start getting worried like, okay, how much are they going to remove from the liquidity provided in the market now that the actual trigger factor, is out, is out of the way. So I'm pretty sure that a lot of market participants are going to be afraid that central banks are going to step off the gas. I'm not saying that they're going to reverse policy. There's no chance they're going to do so. But you know how it is. It's the law of diminishing returns. I mean, the more you give, the more you actually need, to keep the hype. So even by stepping off the gas for a period of time is going to be negative, because in order to sustain, such a high altitude, you need, you need the engines to be at full throttle.
Yep, absolutely. Anyway, other than that, we still wait for more information on Brexit, the B word.
Yeah, let's see what we get with that. I mean, something tells me that we're going to have Christmas with that or something like that.
That's the thing. They were saying we needed something by mid-November in order to have time for it to get ratified and agreed and all that. And look, we're mid-November, nothing's happening. So
I'm telling you, we're going to be discussing, potential outcomes Christmas time. You'll see.
Yeah. Yeah. Otherwise, metals are coming off. No surprise.
They came back quite a bit on.
They have come back. Yes.
Yeah.
I think people do realize that they are also going up in the medium term simply because of inflation. The question is, what route do they take? So I think they are becoming by the dip, just like equities have been for months and months. Obviously, instruments like silver can be a little bit more tricky, and they can be very erratic. In price
gold
movement.
dumped earlier, but it's already more or less unchanged on the day. So, the moment the market thought about it, a few minutes, people were like, really sell gold? Why?
Yep. Yeah. So apart from that, I don't think I need to have to say anything more.
Yeah, basically, other than the round trip that we had, because, for example, look at the price action. I mean, gold, silver came back to where they were, right? Here it is. Silver still in the middle of this symmetrical triangle, likely symmetrical triangle. I mean, it can be, a channel as well. You can see here the parallel with the intermittent line. So, there is a possibility that we're going to break through and move lower. I mean, that's going to be great if you ask me. Getting the opportunity to buy silver even lower is going to be excellent news. Crude oil up on the day quite significantly, which more or less proves that the last 3 days that we had was more or less a consolidation of this move lower. I think it's very, very, very likely that we've seen the end of the correction here in crude, which means that we're going to see a higher high. The 61.8% fib from that high in January, which is the yearly high, to the low, which was what, at 11, because this is the continuous, don't forget. That's why you don't see the negative 40 that we had, because that was on a specific contract, not on the continuous. The 61.8 comes close to $45. I think we're going to get there, most likely. Natural gas, on the other hand, is pushing lower, which isn't a big surprise. We showed that chart at the end of last week, saying that, here it is, this chart saying that the rebound looks to be corrective. So, there should be one more leg lower, most likely, which we're likely seeing now. So I do think that natural gas is going to move higher, but I do think that it needs to do it from a little bit lower. What else? Let me see. So having to do with the rest of the metals, copper is interesting. I wanted to show that. Why it's interesting? Because once again, copper is testing. Yeah, you can see how bullish it is, but it is testing this ascending channel trend line resistance.
Yeah.
So, be a little bit careful here. If we break through this, that's going to be a very, very bullish development, because in essence, the market will have shown that it's so strong that it will have in essence corrected as it's moving higher, because this type of price action that we had here is not impulsive.
Good point.
But on the other hand, it kept producing higher lows, right?
Yeah.
Which resembles very, very much, not coincidentally, what Kiwi has done. Look at this, Dale, right?
Yeah.
Very, very similar type of price action. Kiwi has also spent a period of time slowly drifting higher. And it's now testing this ascending channel trend line resistance. So if we actually find the strength to produce a break higher with momentum, I think that's going to be a very bullish sign. Now, I'm not saying that the Aussie looks bearish in comparison. I mean, Aussie consolidating, in this symmetrical triangle, it has broken higher. The last few days seem to be just another consolidation, because in essence, we failed to push lower in any significant way. So I do think that both of them look, rather bullish. And in essence, the vast majority of assets that are correlated positively with risk, show the same type of attitude. I mean, for example, look at USDMXN, the Kiwi in reverse, because don't forget that the dollar here is, at the beginning. So it's the first currency, not the second. Look at USDMXN. I mean, it has been drifting lower, testing this descending channel trend line support. 78.6 comes at 20, which is also a nice psychological level. Looks to me like it can, if it breaks down from here, it can easily accelerate to the downside. Now, of course, it depends if you're the kind of, looking at the glass half full or half empty type of person. Somebody can say also that, all these assets produce nice counter trend opportunities because you have a very appealing risk reward, right? I mean, if you short copper here, if you short Kiwi here, if you buy the USDMXN, so on and so forth, you seem to have a very appealing risk reward because you're risking little to perhaps, make multiple times that. But on the other hand, I think that, the biggest truth in the markets is that trend is your friend, because when something is trending, usually it keeps trending, for longer than you would expect. And, you need to be very, very careful in, trying to pick tops and bottoms. So I do think that until proven otherwise, the probability of seeing a continuation to the same direction is, high, as it is in the case of gold, in the case of silver, so on and so forth. So I do think we also mentioned last week, and I wrote on the end of week analysis, that you can make a lot of arguments about the potential for the S&P, for example, to move lower, but the only thing I see here is a market that broke through a symmetrical triangle. It came back to retest the broken trend line resistance as support and seems to be moving higher from here. Now, I'm not saying that it can't turn lower. Anything can happen. But what I'm saying is that I don't see a bearish argument in this bullish market for the time being, not as long as we trade above let's say 35.10, right? So above 35.10, trend is your friend and the trend is higher. And next upside targets is the 127% extension of the triangle's range at 36.92 and the 161.8% extension of the triangle's range, which comes at 38.23. So bottom line, I don't see anything that has significantly changed since last week. Even having seen this spike due to the Moderna vaccine news, I think that it's another move in the direction of the prior trend. Now, many people will say, you might see an exhaustion following some type of good news, like, for example, the Moderna news, right? Yes, you might see at some point, but in my opinion, it's much more likely, as I said before, to actually see that when we will actually get a vaccine approved and being out in the market for the reasons I mentioned before, because the market is now going to start, worrying like, okay, now we actually do have a vaccine, so now we actually will get, a path forward back to normalization, and would that also mean some type of normalization of monetary policy? And if that's the case, then how should the market remain supported at so high prices, right? I mean, and I think that's probably more of a better timing to look for a reversal on good news, and not just when you have some rumors or even statements having to do with a future vaccine's efficacy, right? So, I think that what we've had so far remains to be the case, which means a dollar that's under pressure, the dollar pairs that seem to be doing good against the dollar. I mean, all the rest of the currencies that seem to be doing well against the dollar, especially commodity currencies, look rather bullish. Metals that seem to be holding their ground before probably seeing another leg higher. And keep in mind, we've talked about that multiple times. We know the very high correlation between, for example, metals and stock markets and the Fed's balance sheet. The Fed's balance sheet is more or less consolidating near the highs. But where do you expect the next move to happen? I mean, we know that there are trillions to 3 trillions of stimulus coming just in the US within the next few months, right? Who is going to have to monetize all these trillions? The Federal Reserve. So bottom line, the Federal Reserve's balance sheet has consolidating just above $7 trillion. It has been consolidating at around $7 trillion for the past several months. But guess what? Within the next few months, it's going to explode from 7 trillion to rather close to 10 trillion. And that's a given, because there's nobody else that's really willing to buy these bonds. I mean, a fraction of them, yes, but the vast majority of them, not. So what do you think is going to happen to metals and the stock market when within a couple of months, the Fed's balance sheet jumps from 7 trillion to 10? Everything else is going to explode higher as well. Risk assets are going to explode higher. Precious metals are going to explode higher. Commodity currencies are going to explode higher. So, I don't want to be in the other side of this market. You know very well, those of you that follow us closely, that I consider this market to be fake, right? In the sense that what we're pricing in is rainbows and unicorns. There is no question about it. But the question you should be asking yourself is, are we about to price even more rainbows or unicorns, or go back to reality? And I don't see any reason why this market should go back to pricing in reality anytime soon, right? So that's my prognosis about how this market is going to move. Now, let me see if you have any questions that we can have a look at. Dale, who do we have for an interview today?
Larry Tentarelli, Blue Chip Advisor.
Okay.
He's
Okay.
here.
Perfect. Use the Turkish lira. Okay, I'm going to answer this question. You know, at the end of last week, I asked myself if there is a chance that the USD Turkish lira has actually topped on a sequence of bad news which we had in 3 days. And that might be the case. I think the catalyst has been that, in essence, Erdogan has more or less acknowledged that the economy needs to take some pain. So, in essence, he seems to be realizing that he has to come to terms with reality, because unless he does so, the Turkish lira is going to be imploding even further. So we've seen a very nice move lower, and I think that we might see more weakness in the USD Turkish lira. We might see a much bigger correction in the Turkish lira. Bottom line, levels to sell perhaps are 780 and 798 or so. So perhaps we're going to get something like this. Okay. Now keep in mind, this is the chart. So to put things in context, right? Bottom line, this might simply be another correction, but a correction nevertheless that can come all the way back and retest this cup and handles neckline at 720. So it's, I mean, especially if you get nice prices like 795, you know, close to 8 to sell, still that's going to be a decent move lower, right? I mean, even as a corrective move, it has some way to move.
Yeah, November is a good month to trade turkey.
That's a good one.
Don't you think?
Not if you're a turkey.
Well, that's your last trade.
That was a good one.
The turkey got stopped out. So anyway, shall I, after a great joke like that, should I move on to our interview?
Go ahead.
All right.
You deserve it.
All right. Anyway, I'll keep my day job though, Larry. All right. So I'm going to get you set up. I got up at, I don't know, 2 a.m. I didn't want to, but I had to. Anyway, Larry, or no, panelist.
Dale, I think once you go in retirement, fishing should be your first hobby now that you've gotten used to waking up so early,
yeah.
right?
Yeah, no, I can't wait to sleep in. All right, Larry, welcome back to Face.
Dale, good morning. Thanks for having me.
I wanted to have you. I want to, first of all, congratulate you on smelling what it took other people a little longer to catch on to, and that was you saw things happening in some of the deep cyclicals. You liked Freeport, you liked Caterpillar, and they've been moonshots, nice performers. So good eye, Larry.
Thank you. Thank you. I appreciate that.
And we got some vaccine news. Didn't seem to have the same impact that we had last Monday. Kind of a mini deja vu. So I'm interested in what you're seeing here now. We're starting off with, there's Freeport. Yeah, what a nice base. And I know your style. You're still long, right?
Oh, yeah. Yeah, I'm definitely long. I've got right now, so you brought up the vaccine news, and that's good news. So obviously, I think last Monday was more of a surprise to the market. But I think now that we got the first good news from Pfizer, I think that everyone pretty much knows that there's pharmaceutical companies really all over the world that are looking on vaccines. So there's going to be more vaccines that come to market. Moderna came out today. There's going to be more companies. And what I think the market's going to do right now is try to do the balancing act between, we know that for the most part, there should be some vaccines that are widespread, maybe in the late first quarter of next year, something like that. But there's good news down the road. But what I think the market still has to work through is between now and then, there could be some setbacks along the way. Some of these states are starting to dial back some of their, restaurant hours and things like that. So I think it's the balancing act between, we know that maybe 3 to 6 months down the road, we've got some relief. It's just getting to there from here.
Yeah, and isn't also a missing element fiscal stimulus? That
That's-
it's hard to get accomplished when there's still a contested election, even though it doesn't look real contested. There's still no transition going on.
Sure. Yeah. The political, because also they haven't finalized the Senate races, and that could work its way into policy. So there's still some volatility and uncertainty out there. I think the VIX is around 23 or so this morning. So the VIX, it's been coming down, but it's still historically high. And I just think that that's something that what I've done is I'm positioned. I've got a little bit more than average cash. I'm over 20%. I think I'm 24% or so right now.
Okay, this is the highest cash level I believe that you've had since you and I have been talking to each other for the last 6 months to a year, correct?
I was a little bit higher a week or two ago, and in some of the volatility a month or two ago, I was a little bit higher too, just because the VIX is so high, and because the ATR on a lot of these stocks is still pretty high. So we know that there's still probably volatility, but what I'm doing with that cash is I'm putting it to work. So I am continuing to buy into these pullbacks.
Have the FANG and MAGAs gotten cheap enough for you? Because they really haven't participated. They're demonstrating from my work mucho relative weakness, and they were the darlings. And you were smart enough to go for some of these industries that were under pressure. Do you think that the pressure is going to continue in FANG and MAGA? Just more out of valuation concerns?
Yeah, I'm pretty neutral there right now. So it's possible. What I've done, I've got really 4 buckets of stocks that I'm looking at. So I've got my cyclicals and my uptrends. So the buckets of like Freeport and Caterpillar, and if we take a look at some of these charts like Caterpillar, so uptrends just like this that are pretty easy to spot on the screen, rising moving averages, even outside of the cyclicals. Like you look at Agilent, which is in the medical equipment space. I just took a position in 5 below, which is in the small to mid cap retail space. So this is one bucket. Then the second bucket, I've got recovery names. So stocks like General Electric, Boeing, some of these names that are, that really got smashed on the way down. And now they're starting to come over the 200-day moving average. I've still got tech, but I'm holding. So tech has really started to disconnect itself. So I'm still holding the stronger uptrend. So I've got Qualcomm, I've got C, I've got Roku. But if you look at these charts, you can see they're still drifting to the upper right-hand corner. Where there is a concern and where I'm not doing anything is a lot of these momentum stocks. So, we could call them the at-home stocks. So Zoom,
Okay. Yeah.
Peloton. If you take a look at these charts, even Shopify, and Shopify's been one of my favorite stocks over the past few years. But what's happening right now, so a lot of these charts, they've got that look that they're starting to roll over. So you look at Shopify, lower highs, lower lows, the MAs have rolled over. So what I think you've got going on right now is the market is really starting to separate. And I think these momentum names, here's what I can tell you. I'm not chasing any of these names down whatsoever. So Zoom, Zoom obviously was a big winner, but you can see how the trend started to roll over. Now, here's the thing. If they come out tomorrow and say there's a problem with the vaccines, or, there's something that we didn't expect, then all of these names like Zoom and Peloton can go straight back up. But, I can't trade based on what the news might say. I can only follow the trend. So right now, I've got to tell you, like Amazon, I'm still holding Amazon, but these mega caps, you know, they've been under some pressure. And if you look at Amazon over the past, what's this, 5 months now, you know, so I definitely see the market moving out of some of this mega cap tech and into some of these other, you know, cyclicals. I think cyclicals still have a way to go.
Okay. Anything that would tell you that we could have a 10-15% correction between now and year end?
Not right now.
Okay.
You know, the only thing, the VIX has come down to the lower end of the range. One other thing, so and what I do, so the percent of S&P stocks, let's see if I've got that. Percent of S&P stocks, or this is the number of stocks over the 50-day moving average. So you can see it closed Friday, 423 out of 500 were over the 50-day. So that's at the higher end of the range. So could this tell me that at some point the S&P could need a little bit of a, you know, consolidation, something like that? Sure. But as far as, do I see a 10 or 15% correction? Not right now. I don't see anything in the charts that says that. But we also know, you know, the way that the news is right now, you never know what to expect.
Would you be buying some protection with the market up here? You talk about how cheap the VIX is. Is that attractive in any way to hedge some of your holdings by being long vol?
It's not, I could see how it would work. It's not really something that I do. What I try to do is I try to stay focused more. So the trend right now is an uptrend. So what I do is I stay focused on the primary trend. But what I do is I just adjust my cash balances. So having some VIX, you know, having some volatility protection could work in here. It's just not something that I'm going to do. So I just rather have a little bit more cash to offset the volatility.
Okay. A couple of very unloved groups came to life as well. The banks, as yields started heading toward XLF, as yields headed up to 1%. I think that was just a psychological level it pulled back from. And energy, oil. So, you know, oil about to make new recovery highs here. Wondering what you think of these two sectors.
I'm glad that you brought those up. Those are two good sectors, and I put together some charts before we got started today. So we'll start with energy. So energy, I don't have anything here right now. Energy is starting to show some signs of life potentially. So XOP, and I'll bring up crude oil in a second. So XOP, which is the ETF, really focused more on the mid cap and some of the large caps too. But we can see, and I posted this over the weekend on my members page. So it actually had the first close over the 40-week moving average going back to October of 2018.
Yeah.
So from a trend following perspective, this is something that catches my eye. It only closed over by a penny, but it is what it is. I mean, you can win the Super Bowl, you know, by 1 point more than the other guy. So for right now, you know, this is something that's on my radar screen.
Unless you call for recounts and many instant replays.
Instant replays. But
so the Super Bowl by 1 point.
Yeah. So Marathon. So this is another large cap energy. So what I do, I don't trade crude oil per se. The chart for crude oil itself, it's pretty much in our range. So if we look on the chart, let's call it 36 to 44 is really the range going back to June. So what I would say is, based on what the market's doing right now, obviously any good vaccine news or any reopening news is good for crude oil. But I look more at the equities themselves. Now, crude oil futures, if somebody's trading futures, obviously they can make a lot of money in the move. But for me, where I'm trading stocks and ETFs, I get a lot more upside from the stocks than, say, if I bought USO or something like that. But energy is definitely on the recovery screen, and also treasury yields. I'm glad that you brought those up, because yields are tied to the banks. So if we look at 10-year treasuries over the 200-day, and we can see these have started to break out. And I've been looking more at
by
the regional,
TBT. TBT and something like that?
You know,
right,
I've
go ahead.
got, yeah, we've got some people that are in TBT because bonds are definitely rolling over right now. So TLT's rolling over, treasury yields are moving higher. But I've been looking more at the regional banks. So if you look at the trends in some of the regionals like FITB,
Yeah.
if you look at the ETF, KRE, so these started to
Yeah.
hit the radar screen once they came over the 200-day. But
Yeah.
I think what you're seeing right now is the market is definitely pricing in an economic recovery, and we can see that with yields rising, and we can see that with these cyclicals moving up. So I've still got some tech, but I've got more outside of tech now than I've had in, you know, for the most part over the past couple of years.
Okay, so Larry Tentarelli on with on the shift, taking advantage of it. You know, we had a pretty big break in gold last week, but the miners, Larry, seem to really shrug off the precious metals weakness. Still doesn't look great to me, but in comparison, they've been holding up pretty well compared to $100 down day in gold and silver down $1.50 last Monday. Today, gold was down about 25. It's only 4 lower. So it's almost like today's deja vu is more muted than last Monday in a lot of different instruments. What do you think here with GDX?
You know, I'm neutral right now.
Okay.
So
Yeah.
so I started when GDX had this move. So this was before the
Yeah.
vaccine. So right after the election, before the vaccine. So it came back on the radar screen, but then they took it right back down. So for right now, longer term, GDX is still in an uptrend, and it's over a lot of support right here. But intermediate term, for the past 3 or 4 months, it's been in a downtrend. So for me right now, I'm flat. I don't have any positions there.
Yeah.
And I'd like to see it start to move back in the other direction before I tie up some money there.
Okay. Biotech.
I don't have anything there.
Okay.
You know, as far as the charts themselves, so biotech can be pretty volatile. IBB is starting to pick up. The better trends that I'm seeing, like in the healthcare space, are in these, you know, medical equipments and diagnostic stocks. So Danaher, $166 billion market cap. That's a pretty strong uptrend. We looked at Agilent, you know, it's a strong uptrend. Thermo Fisher is another one. So the traditional pharmaceutical names, for the most part, have been dead money.
Yeah, they don't look that great.
Yeah, no, even Pfizer, if you look at these charts, that, you know, Pfizer gave back all of its boost. So, you know, for whatever reason, here's what I will tell you is the market right now, and for the past couple months, has been positioning for an economic recovery. And in an economic recovery, higher beta stocks like cyclicals, banks, even some tech does a lot better. And the lower beta stuff like pharmaceuticals in a recovery move generally don't do too well. So there's still some tech names like Ericsson. Here's where I am seeing some good tech charts. So in the 5G and the telecom space, if you take a look at Ericsson, this is a pretty strong chart right where it sits. Corning is another one. You can see these are in pretty solid uptrends. Even in, you know, but in cloud, I've got to tell you, cloud was my favorite space, let's call it, you know, 6 months ago. But then you see a lot of these charts, while, you know, cloud can move pretty sharply, but a lot of these charts, and I posted this over the weekend, some of these cloud names might not see these highs for, you know, for quite a while or longer. And a lot of these charts, like a chart that's broken down like this, that's not something that, you know, that I want to get involved with.
Are transports part of the recovery theme?
Yeah, for sure. Yeah, transports. So off the top of my head, so FedEx has been pretty strong.
Yeah.
You know, some of the other ones, UPS has been pretty strong. I'm not sure who's in the transport index, but overall, these industrials and the cyclicals, I mean, industrials. So this is my #1 ranked sector right now on the website. It's been between #1 and #2 for the past 6 months or so. But industrials, if I had to pick one space, the industrials right now are pretty strong.
Okay. So Larry, since we're heading towards year end, do you have any philosophy like, towards this time of year? There's a lot of cross currents in the market, like tax selling and book squaring into the end of the year. Do you find trading conditions much more choppier after Thanksgiving going into year end before all the players come back?
Off the top of my head, that's usually a pretty strong, seasonally, a pretty strong market. I think December is usually a pretty good month.
Okay.
This year, 2020 is, definitely going to go down in the record books as it's been
The craziest year in history.
I'll tell you what, you hit the nail right on the head, so you never know what to expect. I continue to expect. So like I started a position in General Electric about a week and a half ago.
Yeah.
Coming over the 200-day, and when I first took it, when they make these moves over the 200-day, that can be a pretty volatile space as money starts to get repositioned. But I think that volatility, I'm still prepared for volatility. So even though these stocks like Freeport and GE and Caterpillar, I don't not expect that one day I think they come out and say, hey, there's a setback in whatever. And then you might see these cyclicals pull back, and then some of these momentum stocks start to move higher. So the only thing that I'm really expecting is just some volatility, but I am still focused on these uptrends. There's a lot of strong, if you look at even Walmart, Walmart's not the most exciting stock, but that's a great uptrend.
Okay. So would you say you're you have the most conviction about cyclicals throughout volatility?
I would say I've got the most conviction on the 3 to 6 months out on the economic recovery trade. So banks, industrials, metals, the industrial metals, and listen, I still like tech, but I'm a lot more selective in what I'm going to do. So I'm holding Roku, and as long as Roku continues this type of a trend, then I'm going to stay with it. But if for some reason Roku starts to do what starts to roll over like everything else, then I'm going to get out of it. So I'm not anti-tech at all. I'm just a lot more selective. I've got Apple, and it's been dead money for me for a couple months. I'd like to see it move higher, but right now, money's finding other places to go besides momentum.
Could I see Roku one more time, Larry?
Yeah. Yeah, that's a strong chart.
Yeah.
It had a nice base breakout, consolidated, another breakout, another consolidation. Yeah. And Roku's definitely a momentum stock. 196 to 255 to 207 in about a week or so.
That's wild.
But yeah, it's and I got into it somewhere in this neighborhood, just off the top of my head.
Okay.
But as long as these charts, these tech names stay like this, and I bring back Ericsson again, these are the tech spaces. Taiwan Semi, you see nice uptrends. Micron, so Micron's a very cyclical semiconductor stock, and you can see Micron starting to break out. So if I were looking to put money into tech, I'd be looking more at charts like that than I would be looking at these charts that start to break down.
More like the semiconductors.
Yeah, semis. I mean, look at AMAT. These semiconductor and these are the most cyclical. So Lam Research, these equipment makers, this is all good cyclical stuff. This is the market saying that we expect an economic recovery, and we expect that these semi companies are going to be buying equipment. So what the charts, if we take out all the news headlines and what have you, the charts say right now that the market's pricing in further economic strength, and you can really see that in the bond yields.
Yeah. So with bond yields and 10 years yields heading up, what do you avoid? Utilities and housing?
I think the stocks that probably get hit the most from higher bond yields, the higher momentum, the higher growth, the big valuations.
Oh, so like the Amazons.
Yeah, the stocks.
Because of valuations, competition on the valuation model.
Yeah, these stocks that trade at 100 times sales, like I think Zoom is 96 times sales. Also,
Yeah.
you know, home builders. So home builders are they're positioned good for an economic recovery, but they don't do as well in rising rates. So, you know,
Right.
home builders, I'm 50-50 on for right now, but I'd be looking at the cyclicals, the banks, and I think these recovery names. So, like, you know, Boeing, and we touched base on Boeing a while ago.
Yeah.
These names, they're going to be volatile. But if I look at where the upside, you know, on any recovery, let's say Boeing just gets back to where it was in February, and this could be,
Yeah.
you know, 6 months out, it could be a year. But if I look at where the upside is versus if I had a stop at, let's say, 15%, it's pretty good math. It's the same thing with GE. You know, if these stocks start to recover, you know, GE's got, you know, maybe another 50%, you know, over time.
Okay, Larry, you want to show your website with the Blue Chip Daily? And you could follow Larry at LMT978 on Twitter.
Yep. Here's the Twitter page, and I appreciate that. So it's at LMT978, and then the website, it's bluechipdaily.com. And then obviously you can go on and see what we do is we keep a running tab, so our best trade alerts for members. So what I do, I publish a top 25 stocks buy list for members every single Sunday. And then every day, obviously I'm on the Twitter feed all day, every day, posting ideas. But I just go where the charts take me.
Okay. All right. Well, Larry, I want to thank you very much for coming in here and updating us on your great work, and appreciate you taking the time to edify our community. Wish you a great fall trading season, and we'll have you back after the winter solstice and see what 2021 looks like to you. What do you say?
Dale, I really appreciate it. Thank you as always for having me on. I appreciate the opportunity. I hope you have great holidays. I hope we the next time that we talk, we can look at some more uptrends.
Okay, Larry, my trading warrior brother, Larry Tentarelli, everyone. You could follow him on Twitter for those of you that are stock traders. Larry's got a excellent feel, very disciplined about his when he takes trades. He's not like me, doesn't want to try and get an edge, and here's the ice crack. So check him out. And that's going to be a wrap. See everyone tomorrow for Turnaround Tuesday. And don't just count your shares, tech, cyclical, anything. Count your blessings. And we'll see everyone tomorrow. Adios. You're very welcome, Horg Galaxy. See ya. Adios, Laura.